Hi, JJ here with The Art of Value. In this episode, I'm going to look at some recent portfolio additions by famous investor and fund manager Michael Burry. Burry's been investing for decades, but of course made famous in the big short by shorting the housing bubble leading up to the global financial crisis. So the latest round of quarterly 13F filings are out. They're filings by fund managers who manage over $100 million. Those fund managers have to be on the public record so we can see what they've been buying and selling during the quarter. We can't see their short positions. With Burry, that's kind of important. We can see the companies that he's been buying. He has been buying a few. There is this tweet from the 15th of November, so very recent, where Burry says, "You have no idea how short I am." I interpret that as meaning that he knows his 13F filings come out, he knows people are looking at it, and he knows that we can't see the shorts. So he's saying, you have no idea how short I am, implying, to me, that implies that he is short, maybe big short, we just don't know. His tweets are cryptic, so we just don't know, but that is a very interesting tweet, isn't it? One important thing to note about Burry's picks, Burry's fund at the moment, is they come to about 41 million invested, and we know that his fund is bigger than that. So we can look at his top positions, but we still think that he's got a lot of cash, or he's got other positions in shorts as well, as I've already mentioned. If you're on YouTube or Spotify video, you'll see on screen the stocks that Burry's been buying in the last quarter. The first one is Geo, the Geo Group. He actually owned that last quarter. He sold out of everything else, which I'll show you in a minute, and he's increased his stake in Geo. The other stocks on the list are Qurate Retail, CoreCivic, Aerojet Rocketdyne, Charter Communications, and Liberty Latin America. You might know some of those, you might not know some of those. We're going to dig into those one by one and have a look. I'll go through each one, not just the top one or two positions, so we'll see what the companies do and why Burry might have bought those particular stocks. Let's have a look at Burry's activity over the last 2 quarters, because it's interesting to see. He owned Geo and Bristol Myers, Booking Holdings, Warner Brothers, Alphabet, Meta Platforms, Cigna, and a list of others that you'll see on screen there, but he sold completely out. And I think that was to do with the macro environment he saw. He saw that things were going downhill and he just sold out. If you're getting value out of this episode so far, please consider hitting the like button in YouTube if you're watching there to spread it to more people. Thanks. Okay, let's have a look at the companies individually. So on screen at the moment is the Geo Group. First thing to notice is the market cap's 1.14 billion and the enterprise value is 3.1. I like to look at enterprise value because it takes debt into account, which is important. And there's a graph on the screen of the share price. It has been going up over recent years quite consistently, but it's had a big dive recently. Michael Burry is known as a value investor, sometimes a deep value investor. For instance, he was in GameStop well before it became a meme stock, when he saw deep value in that and it went up a bit and he got out, well, and then the meme stock thing happened. So he's into deep value. He's not necessarily into growth so much. If something's really undervalued, he might buy it. So we keep that in mind while we're looking at it. First thing to look at when you're looking at a company, well, I do anyway, is what does it do? What does it actually do? What's it in the business of? This company says the Geo Group is a real estate investment trust specializing in detention facilities and community re-entry. So basically it's for-profit prisons and detention centers, which is not something that I would invest in. Everybody's got a line they won't cross for different things. Some might be tobacco, might be weapons, whatever, gambling, other. So every investor's got a different kind of line. There's a form of value investing that's kind of like they're looking for particularly disgusting sort of things that other people wouldn't touch, because that's where a lot of money can be made. I don't want to make this video too long, so I'm not going to go deeply into each company, but you can read on screen if you're on video that rest of that description. Let's dive into some of the financials to have a quick look at why Burry might have invested. The company does derive more than 50% of its revenue from the US government, so that's kind of a concentration of client there. One of the things that jumps out is the debt to equity at 1.9, which is fairly high. If you look at the return on invested capital at 3.27 or the return on capital employed at 9.24, that is not above average, that's fairly low. Generally, there's nothing that stands out as being fantastic there, but I would say it's a fairly stable business, being the kind of business it is, with sort of guaranteed income of people being in prison and in detention. Unfortunately, if we look at these metrics going back about 10 years, nothing stands out as being really fantastic company compared to other ones you might look at. Burry's not really known to be a long-term investor, so he does take short positions, and by short I don't mean as in shorting, I mean fairly short positions compared to some. Some value investors in the traditional sense might buy a company because it's cheap, wait till it goes up to get, say, 100, 200% and then sell out. So buying low, buying deep value, and then selling when it comes up to kind of fair value or just above. That's quite a traditional way of value investing. It's not what I do. I have done that from time to time, but not. I'm looking for more growth and compounding these days. So just looking at that, debt is quite high. It has been higher, so it's come back. It's coming down a little bit, but that's usually more debt than I'd be comfortable with. Could be what Burry sees in this company. He's got a fairly pessimistic view. If you listen to his political views on Twitter, they're not kind of my politics, but he has a fairly pessimistic view about what's going to happen for the economy and politically. So it could be that private prisons are something that he sees as stable and that will do well in the coming years, which is not a great thing, really. So that's Geo. Let's move on and see what else he's got. This is definitely not my cup of tea, and I would never be interested in buying a company like this. Next, we have Qurate Retail. So if we look at this, we can see that it's under $1 billion, considered small. The enterprise value is $6 billion, though, which indicates that it's likely got a lot of debt. If you look at the share price graph there, it's gone down a huge amount recently. This may be what we might call a deep value stock for Michael Burry. Let's have a look at it. I have heard of this company before. I've heard a thesis for it. If you watch Value After Hours, you know Bill Brewster. Understand that he was pretty heavy in it at one point. Not sure if he still is. Not sure it worked out for him, but I don't know if he's still in it or not. I still think he still believes in the thesis, and Michael Burry obviously does too. So what does it do? So it says includes QVC US and HSN market and sell a wide variety of consumer products in the United States, primarily using their televised shopping programs and via the internet through their websites and mobile apps. So basically televised shopping. One of the things in common about 3 of the companies Burry has bought this past quarter is John Malone, who's the director, 10% owner and chairman of the board of Qurate. John Malone is an older investor. He's one of the best investors of past decades. Because of the debt, which I don't like, and the way that he structures it, they're kind of in the too hard basket for me. So that's a reason that I wouldn't be interested in any of these companies, but understand that John Malone is a very good investor, a great investor. So I understand why Burry would be interested in all of these companies. If we just have a look at the financial strength and profitability ranking here, we can see that debt is 25. Debt to equity ratio is 25, which is really high. This kind of would put me off completely investing in something like this, but as you understand that it could be deep value and he's only looking for that short upside and then get out. As I said, looking very superficially at this, but price to free cash flow says 4.5. Price to operating cash flow 1.67. So I can see why Burry might be interested in this company, but you know, it could be a value trap. So going back 10 years here, looking at these metrics, there's really not much to write home about. You can have a look at them on screen there if you want to, but that debt stands out. I would want to look into that. Why is that debt so big? What's going on there? I'm sure it's something to do with John Malone, how he's structuring it, but wow, that is a lot. Something to note is the return on capital employed is pretty low, less than 10. I think the average is about 15 for an S&P 500 company, so less than great return on capital employed. Same with some of those other returns. One of the main things would put me off this company is the industry, the sector that it's in, TV shopping. I mean, we've got so many things that are streaming. In China, we've got the rise of streaming video to sell things online through apps and websites. And this is an older population. I can't see a younger population kind of getting into this unless it's much more e-commerce based, streaming live video. But this is kind of not really like that. And they seem to be sort of going downhill rather than growth, so that would put me off completely. But I can see why Burry might be interested for that deep value factor of it. Perhaps it's undervalued and would go up to fair value and then he'd sell, so a kind of short-term value play. Next is a company called CoreCivic. It's a $1.33 billion market cap, so classed as a small cap again. The enterprise value is 2.37 around there according to this, which again implies they've probably got a reasonable amount of debt. If you look at the share price graph there, it's been going down for a significant amount of time, quite a long steadily down, but Burry might see this as cheap again and a stable company in the pessimistic times that he sees. We'll just see. And again, if we look at what this company does, we see that CoreCivic is an owner and operator of private prisons and detention centers in the United States. It operates in 3 segments: safety, community, and properties, and so on. You can read that whole description if you want to. Again, private prisons, not something that I'm into, but Barry can see in his pessimistic view of things that maybe they're going to be a stable and good business going forward. Again, there are some financial metrics going back about 10 years. Nothing to write home about. That you can see that debt that has been kind of consistently reasonably high. Return on capital employed, I always like to look at that, is pretty low, well below average. This is a REIT though. Again, I think Barry's probably interested in this because of his kind of pessimistic view on society, on where US society in particular is heading in the next few years. Probably a stable company with government contracts. He probably thinks there's going to be more people in prisons going forward. I question that actually. So if you look at the cannabis laws in the US changing, Biden recently announced of letting people out of prison for cannabis offences. So I wonder if actually the number of people in prisons might go down, but I just don't know. These are in order of how big the positions are for Barry. This is only 5.3 million, so a bit smaller we're getting now. This is Aerojet Rocketdyne Holdings. It's a $4 billion company though, so bigger than some of those other ones. And the enterprise value is $4 billion. So this looks a bit different. If you look at the share price, it's been going up for quite a long time. It's definitely looks not to me on the surface like a deep value play. So this might be something else. It almost kind of looks like momentum from looking at this, but let's look a little bit deeper. So if we look at the share price on this, the share price from July to November, it's actually gone up over 26% since then. So it's not something that's been going down and he's got it at rock bottom. It's kind of been on the way up for a while. This is definitely not private prisons this time. It says Aerojet Rocketdyne Holdings manufactures aerospace and defense products and systems. It produces driving and launching systems for defense and space applications, weapons and weapon systems for tactical missions. The systems can provide directional control for rockets, satellites, missiles, and other technical products. Okay, so we've got kind of rocket components there by the sound of it. I've seen actually before that Barry's had a stake in a rocket company, Rocket Lab, when it was a SPAC. For a short time he held it and then sold out, but I did notice that, so it's something that maybe he feels comfortable investing in. If we look at financial strength and profitability, we see the debt's not as high as those other ones, so that debt's not too much of a problem at 0.66. Gross margins 15, operating margin 10. Again, when we look at some of these metrics, they're not as low as some of the other ones. We've got the PE ratio at 42, nearly 43. We've got EV to EBIT at 24.87, so these would be higher than you'd want to see for a deep value company. If we look at some of these 10-year metrics, we can see that some of them are a little bit better. We can see the ROE has been as high as 37, 34, so that's kind of looking a bit more healthy. Return on capital employed is kind of looking around average, a bit below average, but generally some of those metrics kind of look a bit better. The debt to equity is certainly lower than some of those John Malone companies loaded with debt. This might be part of the answer as to why Barry's invested in this company. It says Aerojet Rocketdyne propulsion soars in successful SLS debut. Aerojet Rocketdyne played a central role in enabling humanity's next giant leap with the successful launch of NASA's Super Heavy Lift Space Launch System exploration rocket today, and this was on the 16th of November. The company provided critical elements to the Artemis 1 mission with propulsion on both the SLS rocket and the uncrewed Orion spacecraft. So this indicates to me that Barry was kind of looking for this, maybe this event. He bought it particularly leading up to this, and it is kind of a momentum, or you could say value, you could say momentum. Sometimes value can be momentum if you buy it low and then you know that a catalyst is going to propel it up, propel it up. And so it could be, this could be the sole reason Barry bought it, or other events going after this as well. Who knows how long he's going to hold it for him, but it might be a short time. Now to Charter Communications, we see that it's a $61 billion company, so much bigger, and the enterprise value is $157 billion, so perhaps more debt there. And we can see from the share price that it's gone down a lot recently, which could be a reason that Barry is interested in this in particular. And I'm going to go straight to the board of directors on this one. We can see the name John Malone there, who's a director emeritus of this company, so another John Malone company. Here's the full description. You can read the whole thing if you want, but basically the firm now holds networks capable of providing television, internet access and phone services to roughly 54 million US homes and businesses, around 40% of the country. Charter serves 29 million residential and 2 million commercial customer accounts across the Spectrum brand, making it the second largest US cable company behind Comcast. So there you have it, another John Malone company involved in cable. And quickly, financial strength and profitability. We can see the debt there again, 10.95 debt to equity, gross margin 45, operating margin 22, and return on equity 44. Michael Burry might have been interested in these metrics. P ratio of about 12, price to free cash flow of 9, price to operating cash flow of 4, EV to EBIT of 13, so not particularly high, those numbers, so you might be interested in this company from that, even though there's the high debt, which is typical of John Malone companies. As I said, these group of John Malone companies, the complex kind of web he has of companies is in the too hard basket for me. With the high debt and the complexity of it, it's just not for me, but I think Michael Burry feels comfortable with that. He's kind of forensic in his looking at companies. He was during the GFC, so he probably feels comfortable owning these three companies together. And here we have Liberty Latin America. It is $1.8 billion market cap, enterprise value of 8.94. So again, no doubt a lot of debt. We see the share price there. It's been going down steadily. And what does the company do? Liberty Latin America is a telecommunications company. Surprise, surprise. It's a provider of video, broadband internet, fixed line and mobile services to residential businesses, customers, and of course the company's reportable segments include the Caribbean, Panama, Puerto Rico, Costa Rica. And again, this is another John Malone company. He's a director and 10% owner of this company as well. Surprise, surprise again. We see here again the debt is significant. The debt to equity is 4.23. Gross margin though is 75%, operating margin 15. Those were the 6 current Burry holdings. Again, it's good to remember that he said, you have no idea how short I am. We don't know if he's got any big shorts on. Given his view of the macro environment, it would not surprise me in the slightest. So what do you think of Burry's picks? Are you interested in any of these companies? Can you see why he's invested? Let me know in the comments what you think. If you've enjoyed this episode, got value out of it, please consider hitting that subscribe button on YouTube or in your favorite podcast app. Follow or subscribe, whatever it allows you to do. And I'll see you next time. Thanks for watching.